Hi everyone, welcome to Taxes. Today we shall be going through Intuit Academy's Level 1 Federal Individual Tax Return. So to start with, we'll start with the Form 1060. The IRS Form 1060 is one of the official documents that the U.S. taxpayers use to file their annual income tax return. As a tax expert, it's important that you become familiar with the sections of the form so that you know how to report the taxpayer's income and deductions to determine the amount of tax they owe or the refund they can expect to receive. Depending on the type of income that is reported, it may be necessary to attach additional schedules and forms. So let's get started. So, the 1060 is divided into sections where taxpayers report their income and deductions to determine the amount of tax they owe or the refund they can expect to receive, depending on the type of income you report. It may be necessary to attach additional schedules and forms. You just follow the form. So I'll ask you a few questions here. How many versions of the Form 1040 are there? You can guess. Well, there are 4 versions. There are 4 variations of the 1040 form. 1040A, 1040EZ no longer exists. Form 1040A, Form 1040 is the one the majority of taxpayers will use to report income and determine their tax for the year and any refund or additional tax owed. Form 1040SR is the version for senior taxpayers. If you're over 65, Form 1040SR is nearly identical to Form 1040, but is printed using a larger font and includes a chart for determining the taxpayer's standard deduction. Form 1040NR, that's November Romeo, NR, is the form for non-US citizens who do not hold a green card, and it is several pages longer than the Form 1040, the regular version that citizens and senior citizens would use. Form 1040X is for taxpayers who need to make amendments to their tax returns after previously filing. So if you had filed already, whether last year or even the same year, you can make an amendment using 1040X. So let's take a closer look at the 1040. So, Form 1040 contains multiple sections. The top of page 1 shows the filing status, name and address, social security number, and information about standard deductions. The filing status section requires the taxpayer to select the option indicating the relationship status and household arrangement. Filing status options consist of single, married, filing jointly, married, filing separately, head of household, or qualifying surviving spouse. The checkboxes indicate how the standard deduction will be modified if applicable. The bottom of page 1 consists of income and tax credits. Line 1 has been divided into multiple lines to delineate many types of income, which may or may not be reported on Form W-2. Line 2A includes tax-exempt interest. Tax-exempt interest is interest income that's income the IRS considers non-taxable. For example, municipal bonds. An interest-paying institution will send and report the amount in Box 8 of the 1099 INT. Line 2B includes taxable interest. This line consists of taxable interest earned from saving accounts, personal loans, certificates of deposit, and annuities. An interest-paying institution will send these amounts on a Form 1099 INT to you. If interest income exceeds $1,500, a Schedule B will need to be completed and attached. Line 3A includes qualified dividends. Qualified dividends must meet two requirements. 1. The payments must be from a domestic corporation or a qualifying foreign corporation. 2. The taxpayer must hold the stock for more than 60 days. During the 121-day period that begins 60 days before the ex-dividend date. Qualified dividends will be reported to you on Form 1099-D, Box 1B. Box 3B includes ordinary dividends. Dividends are payments made to shareholders from a corporation. A dividend is ordinary if it doesn't meet the two requirements of a qualified dividend. A dividend-paying institution will send these amounts on a Form 1099-D, Box 1A to the taxpayer. If your dividend amount exceeds $1,500, a Schedule B will need to be completed and attached. Line 4A and 4B include IRA distributions. This line consists of all income distributed from traditional individual retirement accounts. A distributing institution will send these amounts on Form 1099-R to the taxpayer with the IRA SEP simple box checked near Box 7 on Form 1099-R. Line 5A and 5B include pensions and annuities. Next one consists of pensions and annuity accounts. A distributing institution will send these amounts on Form 1099-R to the taxpayer. Line 6A and 6B include Social Security benefits. This line consists of income from Social Security Administration. Dependent upon their taxable income, some taxpayers are required to pay federal taxes on this income and others do not have to. Taxpayers receiving Social Security income will receive a Form SSA 1099, and 6C includes report to lump sum Social Security benefits. Line 7, capital gains or losses. Line 8, other income from Schedule 1. Line 10 includes adjustments to income from Schedule 1. Line 26. Lines 12 through 13 are other deductions from adjusted gross income, AGI. Line 12 details the amount deducted for itemized or standard deductions. If the taxpayer is itemizing, it will report the amount from Schedule A. If using standard deduction amount, it will be calculated based on filing status and modified by checkboxes listed at the top of Form 1040. Line 13 includes qualified business incomes. The amount of this deduction is calculated on Form 8995 or 8995A. That's a lot. Top of page 2 consists of taxes, other taxes, tax credits, withholdings, and payments. Line 16 includes tax from taxable income, tax from Forms 8814, 4972, tax due to making a Section 962 election, recapture of an education credit, 8621, repayment of any excess advanced payments of healthcare advanced payments from Form 8885, 8978, net tax liability deferred under Section 965I, triggering event under Section 965I. Line 19 includes child tax credit and credit for other dependents. This line consists of the amount of taxpayers received as a credit when claiming a child as a dependent. The tax credit for 2023 was $2,000 for each child under 17. Line 20 comes from Schedule 3. Line 8, line 23 comes from Line 23, other taxes including self-employment tax from Schedule 2 and Line 1. Okay, that's a lot. When you go through the form, when you're looking at the form, it's a lot easier. Lines 25 through 30 are payments and refundable credits. Line 25A includes income tax withheld from Forms W-2. Line 25B, income tax withheld from Forms 1099. Line 26 estimated federal income tax for the current and amount applied from the prior year. So line 27 includes earned income credit. This line consists of refundable tax credit for low to moderate income working individuals and couples with children. The amount varies depending on a taxpayer's income and number of children. The credit may give you a refund even if you don't owe any tax or didn't have any tax withheld. Line 28 includes additional child tax credit. This line consists of a credit received if the child credit is greater than the total amount of income taxes owed. This credit is calculated on 8812. Line 29, American Opportunity Credit for education. If you had qualified education expenses, you would input the information in this line. It's calculated on Form 8863. This line details any stimulus amounts not received. That's 29. It would have any amounts not received for the first and second stimulus payments. Line 31, amount from Schedule 3, and line 15. The bottom of page 2 details the refund amount balance due or applying all or a portion of the refund to next tax year. Line 34 includes the amount overpaid in taxes. Lines 35A through 35D include the refund amount and how it is to be received, direct deposit or by check. If no direct deposit information is entered, the taxpayer will receive the refund by check. Line 36 is the amount you elected to be applied to next year's estimated tax. This line consists of the amount of the overpayment on line 34 applied to next year's estimated tax. Line 37 is the total amount the taxpayer owes, tax plus penalty, if any, from line 38. Line 38 is the tax amount owed for a penalty. This penalty is calculated on Form 2210. And that is your Form 1040. It is a mouthful, isn't it? So there are different schedules. You have Schedule 1, 2, and 3. You have Schedule A, B, and D. Schedule C and SE. Schedule E. Schedule EIC. And Schedule 8812. Get my stuff, yeah. So, what are the top 5 errors found on Form 1040? So, software does calculation for you, populates the numbers in the appropriate boxes. When that software isn't available, it must be done by hand, and there might be some mistakes. So we shall talk about 5 top mistakes. Those are as follows: misclassifying income, inaccurate filing status, schedule not included, information not carried forward, misuse of social security number. All those are mistakes, errors that are very common on Form 1040s. Misclassifying income is a common error when evaluating a 1040 form. It can happen when income and deductions are incorrectly placed on the 1040 form. An example of this is when a retiree reports Form 1099-R as wages instead of pension income. So, Form 1099-R, it's pension income if that's a retiree, it's not wages, all right? And that is one of the common mistakes. And then inaccurate filing status. It's not uncommon to find inaccurate filing status on 1040s. It can happen when an individual marks the filing status as one thing when it's another. An example is when a recently married couple files their taxes as single when they should be married, filing jointly, or married, filing separately. Next one is schedule not included. Form 1040 includes multiple schedules as we went through them earlier. So we may forget to include schedules when information from the appropriate schedule is not included on the 1040 form. For example, when capital gains dividends are reported on 1099-D and recorded on Schedule D, but not included on Form 1040. That's line 7. The other one is information not carried forward. Information not carried forward from the prior year is not carried over into the current year. For example, when a prior year's unallowed losses are not reported correctly. Misuse of Social Security number. On a Form 1040 is common. This can happen when a Social Security number is used in the same year to file taxes more than once. An example of this is when a parent claims their child as a dependent on their income taxes, and in the same year a child files their own taxes indicating they were not claimed as a dependent. So if a child files the taxes claiming that they were not claimed by anyone, and the parent claims them and puts a Social Security number, that would constitute a misuse of Social Security number. So you need to go through all these and have your tax preparer assist you, or your CPA assist you if you need help. So swiftly on, the key takeaways so far have been: individual taxpayers use Form 1040 to file their taxes with the IRS. The form determines whether the taxpayer owes more taxes or is eligible for a tax refund. On Form 1040, you'll be required to provide personal information such as your name, address, Social Security number, and the number of dependents that you have. As a taxpayer, it is necessary to declare earnings from wages, salary, taxable interest, capital gains, pensions, Social Security benefits, as well as any other sources of income. Depending on the individual tax situation, the taxpayer may have to submit additional schedules and forms with their Form 1040. We went through a plethora of schedules earlier. So depending on your status and your situation, you may have to attach one of those or some of those with your 1040. So the form determines if the filler will receive a tax credit only. Form 1040 does not only determine if a taxpayer will receive, a credit. There's a lot more to it than credits. So many in filling out Form 1040. So if you're filling out your Form 1040 and you come across a question that contains the following information: income from your Form W-2, you have a couple of jobs, right? So first company 28,000, second company 12,500, third company 9,500, and then on your Form 1099 INT, in your first bank $3, your second bank $225, your third bank $45, right? That's loans, right? What amount should you put on line 1? So you would have to put 49,000 in line 1, or 49,800 in line 1. Okay, because on the 1040, line 1 includes wages, salaries, tips, etc. This line displays earned income reflected on a Form W-2. So a taxpayer must add the sum of Box 1 from all W-2s issued during the tax year and list the total value in line 1. Okay, so if you're filling it out, and then on line 2B, what should you put there? Line 2B would be your taxable interest. All right, all the interest you got, that's where you would put that, the total of it. It consists of the taxed interest accrued from savings accounts, personal loans, certificates of deposit, and annuity contracts. An interest-paying institution will send these amounts to you on a 1099 INT. Okay, so all those go in line 2B. Let's say you have children, right? You have 2 kids, and the year was 2023. How much do you think you would be eligible for in tax credits? Well, tax credits in 2023 were $2,000 per child, right? So that means that you would have 4,000 for any child, because there are 2 children under 17, right? So that's the age, 17, they're considered children. So another scenario, let's say you have a net long-term capital loss reported on Schedule D, line 15, of 9,575 with no other capital gains or losses reported. How much of this loss can be carried over to 2023? How much of this can be carried over to 2023? So net capital losses in excess of $3,000 can be carried over. Any capital loss of any net capital loss of over 3,000 can be carried over. So if you lost 9,575 minus 3,000, you can carry over 6,575 into the next year. So another scenarios, let's say you're filling out your Form 1040 and your taxpayer questionnaire contains the following information: W-2, 115,000, first company, 1099, you have a CD that paid you 125, Form 1099 div, you got dividends there. So from the company A, you had 300, B, 800, and C, 1,100. So what schedule should be completed and attached to Form 1040 because of all the additional? What schedule should be completed and attached? So Schedule B includes taxable interest and ordinary dividends totaling more than 1,500. So Schedule B is required. Form 1099 int is taxable interest. Okay. Another scenario, let's say you and your spouse were married in the middle of the year, and in years prior you used a single filing status for federal tax filing purposes in preparation of your Form 1040. So right now, which of the below filing status would you choose? Because you got married in the middle of the year in July, right? So I would say that you are married. You are married, right? So you should file you should choose the status as married, filing jointly. Well, you can choose to file as married, filing separately as well, but you know, that's what I would say. So those are the two options: married filing jointly or married filing separately. The keyword there has to be married in the married bracket. Okay, so another scenario. So while preparing your taxes, if you come across two forms, 1099 RS, which reports a $12,000 distribution that is completely taxable, and another reports an $8,000 distribution that is not taxable, what amount should report on Form 1040 lines 4A and 4B? Right? What amounts should report? So I'm going to say that you should report. You must add the sum of box 1 from all 1099 Rs issued during the tax year and list the total value on Form 1040, line 4A. So that's what you should. Okay. $20,000 and $12,000 from 1040, line 4A. 4B include IRA distributions. This line consists of all income distributed from individual retirement accounts. So you must add the sum of box 2A from all 1099Rs issued during the tax year and list the total value on Form 1040, line 4B. So another scenario, let's say you bought a residential real estate 2 years ago and rented it full time. What schedule should you include with your Form 1040? What schedule should you include? Schedule 1 includes additional income and adjustments to income. Additional income consists of taxable refunds, credits, or offsets of state and local income taxes, alimony received, business income or loss, other gains or losses, rental real estate or royalties, partnerships, S corporations, trusts, farm income or loss, unemployment compensation, and other income, right? So you would put it in that bracket. You would put it in Schedule 1. Attach a Schedule 1 for rental income. Let's say another scenario. If you received a capital gain distribution reported on the Form 1099 DIV, Box 2A, and also received a 1099B reporting long-term capital gains, what would you do when preparing the Form 1040? What would you do when preparing the Form 1040? You would attach a Schedule D. That's what you would attach. A Schedule D. This schedule consists of short-term and long-term gains or losses on assets. All right. So that's where you would report those. Okay. Yep. Schedule D. So, estimated payments and extensions. What are estimated payments and extensions? For individuals and for business owners. So taxes must be paid as earned or received income during the year through withholding or estimated tax payments. Individuals, including sole proprietors, partners, and S corporation shareholders, generally have to make estimated tax payments if they expect to owe tax of $1,000 or more when their return is filed. Okay. However, individuals don't have to pay estimated tax for the current year if they meet all of the three following conditions. All right. So, condition number 1, they had no tax liability for the prior year. Okay. Condition number 2, they were a U.S. citizen or resident alien for the whole year. Okay. Condition number 3, their prior tax year covered 12 months. Avoiding penalties for underpayment of estimated taxes. So if they didn't pay enough tax throughout the year, either through withholding or by making estimated tax payments, they may have to pay a penalty for underpayment of estimated tax. Generally, most taxpayers will avoid this penalty if they owe less than $1,000 in tax after subtracting their withholdings and credits, or if they paid at least 90% of the tax for the current year or 100% of the tax shown on the return for the prior year, whichever is smaller. So there are ways to avoid it. So the penalty may be waived also if the underpayment was due to a casualty, disaster, or other unusual circumstances. For example, we had Hurricane Helene that just went by, right? That would qualify. And it would be inequitable to impose a penalty, or if the person retired after reaching age 62, or if the person became disabled during the tax year for which estimated payments were required, or in the preceding tax year and their underpayment was due to reasonable cause and not willful neglect. The key word is willful neglect there. So payment due dates for estimated taxes. The year is divided into 4 payment periods for estimated tax purposes, each with a specific payment due date. If an individual doesn't pay enough tax by the due date of each payment period, they may be charged a penalty, even if they are due a refund when they file their income tax return, right? So the 4 due dates for estimated payments are April the 15th, take note, June the 15th, September the 15th, and January the 15th of the next year. All right, so right now, the last one passed, September 15th, right? So now the next one is January the 15th. So that's April 15th, June 15th, September 15th, and January 15th. Those are estimated payment due dates. So how to request a tax filing extension until October 15th. If an individual needs more time to file taxes, they can request an extension through October 15th. They must file their request by the April tax filing due date though to get the extension. All right, so you have to ask for the request before the deadline in April. Then you get the extension to file it by October the 15th. It's important to pay any tax owed by the April filing date though, because the extension is only for filing your return. You would still get fined on, or you might have to pay interest on the amount of taxes that you owed, if you owed anything. So let's look at types of extensions. Automatic extensions. Someone may qualify for an automatic tax filing extension if they are in a federally declared disaster area. So for example, you had a lien, or if there was a disaster, some kind of disaster, fire, flooding, or hurricane, whatever disaster it is that's federally declared in April, you might qualify for an automatic extension. You wouldn't even have to put it in, right? If you are in the military stationed abroad or serving in a combat zone, you automatically get an extension. If you're a citizen or resident alien living outside the United States as well, you qualify for automatic extensions. All right. So, how do you get an extension? There are 3 ways to get an extension. There are 3 ways to extend the deadline for filing a tax return until October 15th. 1, pay online and check the box. Right? When you go online, you just go online to pay whatever you think you might owe. You check the box. Pay what you owe. Number 2, pay what you owe using an online payment option and check the box. You pay as part of filing for an extension. You don't have to file a separate extension form. You'll receive your extension's confirmation number for your records. Okay, if you pay it that way, you pay online and check the box for an extension, or pay what you owe using an online payment option and check the box as part of the filing process. And that is your extension right there. Okay, you will receive the confirmation number. Number 3, you can use free file. No income limit for extensions. Okay, you can use free file to request an automatic tax filing extension electronically. Okay, so it's on the IRS website, free file, and then it takes you out to another website. I think it's Tax Act, or there's some other companies there, and then you can file your extension there. It's very simple. Okay, and then you can also request an extension by mail. Form 4868 at 4868 is an application for automatic extension of time to file U.S. individual income tax returns, and it can be filed by mail, online, with an IRS e-filing partner, or through a tax professional. They will do it for you in an instant. So estimate the tax owed for the year on the extension form by subtracting the taxes already paid for the filing year. So that's how you can estimate the taxes owed. Okay. Key takeaways. So below are some key points to take away from this section, from this lesson. Taxes must be paid through withholding of estimated tax payments as income is earned. Okay. Individuals, sole proprietors, partners, and S corporation shareholders generally have to make estimated tax payments if they owe $1,000 or more in taxes. So run your own business, whether as an individual, sole proprietor, partner, or S corp, or a shareholder, you have to make an estimated payment if you owe $1,000 or less, or rather $1,000 or more in taxes, $1,000 or more. 3. Estimated tax payments can be avoided if certain criteria are met, such as having no tax liability the prior year, being a U.S. citizen or resident alien for the full year, and preceding tax year being 12 months. Okay, if you pay 12 months worth of taxes. And then number 4, a penalty may occur if taxpayers haven't paid enough tax, but most will avoid penalties if they owe less than $1,000 or paid at least 90% of the tax due for the current year or 100% of the prior year's tax. Okay. Form 2210 can verify any penalties resulting from underpayment of estimated taxes, which could be waived depending on the circumstances leading to the underpayment. That was lesson 5. So takeaway number 6. The year is divided into 4 payment periods for estimated tax payments, each with a specific due date. Penalties might be charged if the payment due date is missed, even if a refund is expected when filing the income tax return. Okay. 7. Automatic tax filing extensions are available for people in federally declared disaster areas, active duty military personnel stationed overseas or in combat zones, and non-resident aliens or aliens living outside of the U.S. 2 more takeaways. There are 3 ways to extend the tax filing deadline until October 15th. 1 is paying online while checking the box. 2 is using free file electronically. Number 3 is mailing in form 4868. That's 4868 by mail. Okay. If requesting an extension by mail, this is the last takeaway. If requesting an extension by mail, taxpayers must estimate their tax owed by subtracting the taxes already paid for the filing year. Okay, so that's important. So let's imagine this. A sole proprietor who expects his tax liability for the current year to be $1,500. He had no tax liability the previous year, but he was a U.S. citizen who lived in the country for the entire year. However, his prior tax year covered only 12 months. Which of the following statements is true regarding Tom and his estimated tax payments? Tom is required to make estimated tax payments because he expects his tax liability to be $1,000 or more. Tom is required to make estimated tax payments because he meets the 3 conditions for exemption. He is not required because he meets the 3 conditions for exemption. Right? Yeah, he is not required to make estimated tax payments because the 3 conditions, which is, U.S. citizen, and they paid for a full year of taxes the previous year. And then also, if you're a U.S. citizen and a sole proprietor, say you expect that you will owe $2,500 in taxes for the current year, according to the IRS guidelines, right? According to the IRS guidelines, the expectation is that you must make estimated tax payments for the current year. If your estimated tax liability is $2,500 or more, according to guidelines, you should. Individuals, including sole proprietors, partners, must pay estimated tax payments if they expect to owe $1,000 or more in taxes when their return is filed. So, if you're expecting to owe $2,500, you must make estimated tax payments to avoid underpayment penalties. Let's say you are a resident alien, right? And you owe $5,000 in taxes for the year, and the deadline is fast approaching. What should you do to request an extension until October the 15th, right? The best thing is to pay what you owe and request. I'll check the box. That's what I say. Well, but if you are an alien, what do? You have to fill Form 4868. Okay, you have to fill Form 4868 by mail or through a tax professional to request an extension, estimating your tax owed for the year and subtracting the taxes already paid for the year. All right, so you owe $5,000. You subtract whatever you paid already, and then you must file an extension to avoid underpayment penalty by estimating your tax owed on Form 4868 and subtracting any taxes already paid for the year. You can do it by mail, through an IRS e-filing partner, or through a tax professional. Once you have estimated and confirmed your tax payments, you have until October the 15th to submit your tax return. Okay. So we're going to look at a few more tax scenarios, okay, and see. So you have a family of 4, okay, a teacher, and you need excuse me. So more about the Form 1040 to ensure that you have all the information you need, right? The IRS 1040 form is one of the official documents that the U.S. taxpayers use to file the taxes. Okay, the summary, it's divided into sections where taxpayers report their incomes and deductions to determine the amount of taxes you owe. Okay, there are different versions of Form 1040. There are 4. We did go through them. 1040. It's 1040A actually. So we have 1040 SR for senior citizens over 65. 1040 NR for if you're a green card holder, if you're non-US citizen. Then you have 1040X, which is for taxpayers who must amend your tax returns after filing a 1040. And you have your 1040, of course, which is regular, a 1040. All right, and the purpose of the 1040 is to calculate taxable income and tax on that income. Okay, one of the first steps is to calculate the AGI, which is your adjusted gross income, by reporting your total income and then claiming any allowable adjustments, also known as above the line deductions. Right, in a significant number, the AGI is a significant number since many deduction limitations are affected by it. And taxpayers will report their AGI on line 11 of the tax year for 2023. Since this is 2024, okay, you need to look at the latest versions. I don't know when you're watching this, but you have to make sure it's the current version of the Form 1040, right? you can reduce it further with either the standard deduction. You can reduce your AGI, annual gross income, further by either the standard deduction or the total of your itemized deductions. So I would say you compare the two and see whichever gives you the most deductions to reduce it. All right. And itemized deductions and expenses include but are not limited to mortgage interest, state and local income taxes on sales taxes, charitable contributions, excess medical expenses, things like that. These are suppose the total of your itemized deductions do not exceed the standard deduction for your filing status, right? In that case, your taxable income will usually be lower if you as a taxpayer claim the standard deduction. So that's what I do. You compare, you itemize, total them up, and see which one gives you a better deal. And standard deduction might be your better option. So the most recent changes to Form 1040 for 2023, the standard deduction amount has been increased for all filers. Okay, the amounts are a single or married filing separately is $13,850, married filing jointly or qualifying surviving spouse $27,700, head of household $20,800. Okay, these are all different status designations that you would select. And additional child tax credit amount was increased as well. The maximum additional child tax credit amount has increased to $1,600 for each qualifying child, right? For those that have children or qualifying children. And then there's also a new clean vehicle credit, right? The credit for new qualified plug-in electric drive motor vehicles has changed. This credit is now known as the clean vehicle credit. Okay, and the maximum amount of the credit and some of the requirements to claim the credit have changed as well. The credit is still reported on Form 8936, that's 8936, and on Schedule 3, Line 6F. Okay, so the new lines on Schedule 3 as well. There are new lines on Schedule 3. This year, the Schedule 3 has new lines. Line 5 has been separated into lines 5A and 5B. When I say this year, I mean filing for the 2023 year. So this is 2024. This is October the 2nd, 2024. So 2023 filing, if you're using the Schedule 3, line 5 has been separated into lines 5A and 5B so that the residential clean energy credit and the energy efficient home improvement credit reported on Form 5695 each have their own line. Right, new line 6M was added to report the credit for previously owned clean vehicles from Form 8936. Line 13C will be used to report the elective payment election amount from Form 3800. That's Form 3800. Okay, so you also have credit for qualified sick and family leave wages. The credits for qualified sick and family leave wages paid in 2023 for leave taken before April 2021 and for leave taken after March 31st, 2021 and before October 1, 2021 are now reported on Schedule 3, Line 13Z. That's 13Z. So, alternative motor vehicle credit. The alternative motor vehicle credit has expired. Okay, self-employed health insurance deduction. if you can take the self-employed health insurance deduction on Schedule 1, line 17, and you can't use the self-employed health insurance deduction worksheet in these instructions, you will now use Form 7206, that's 7206, instead of PUB 535. That's publication 535, I believe. That's what you will use, 7206 instead of PUB 535 to figure your deductions. Next, qualified charitable one-time election. Beginning in 2023, you can elect to make a one-time distribution of up to $50,000 from an individual retirement account to charities through a charitable remainder annuity trust. A charitable remainder annuity unity trust, or a charitable gift annuity, each of which is funded only by qualified charitable distributions. I'm going to say this again. Beginning 2023, you can elect to make a one-time distribution of up to $50,000 from an individual retirement account to charities through a charitable remainder annuity trust, a charitable remainder unit trust, or a charitable gift annuity, each of which is funded only by qualified charitable distributions. Okay. And then next, increase in required minimum distribution age. So if you reach age 72 in 2023, the required beginning date for your first required minimum distribution is April 1st, 2025. Insurance premiums for retired public safety officers. Eligible retired public safety officers can exclude from income up to $3,000 of distributions from their eligible retirement plan that is paid directly to them and is used to pay for health insurance premiums. For more information, see insurance premiums for retired public safety officers later. Exceptions to the 10% additional tax for early distributions. The exception to the 10% additional tax for early distributions includes the following: distributions from a retirement plan in connection with federally declared disasters, distributions from a retirement plan made to someone who is terminally ill, distributions to certain firefighters who meet the age or years of service requirement. And then direct file. The IRS is taking steps to implement a direct file pilot during the 2024 filing season. This pilot will give eligible taxpayers an option to prepare and electronically file their 2023 federal tax returns directly with the IRS for free. The direct file pilot will be offered to eligible taxpayers in participating states who have relatively simple tax returns, reporting only certain types of income and claiming limited credits and deductions. Okay, so there you have it, guys. We have gone through the Form 1040, an overview of the Form 1040, and once again, you want to check the version, check the current version for every year, because as you see, we've gone through several things that have changed during the last year, that have changed on the last year. Okay, so thank you for sitting through this. Okay, now that you're familiar with the 1040 and you know how to document income deductions, you're on your way to learning more about taxes. Okay, so we shall keep recording as much as possible. Thank you once again for joining. again, I'm just learning all this as well from Intuit Academy, the tax level 1, federal individual tax returns, and recording this for the YouTube channel taxes. It will be posted on taxes. Okay, so thank you again for watching. Bye bye.